Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook. First, we're going to start with the Japanese shares. They lost a little bit of ground on Wednesday, bucking against in most other Asian markets as of course investors counted down to the upcoming British vote to decide whether to remain in the European Union. The benchmark, Nikkei 225 index, was down about 0.7%, with of course stocks under pressure from a relatively stronger yen, but about that a little bit later. The greenback, of course, briefly dropped back above the 105 yen for the first time in nearly a week late on Tuesday, but of course last stood at 104.55, down 0.2%. Some banks are not in the market today, or they're just in for commercial orders ahead of the vote, so dollar yen might be range bound for some time. The dollar had risen earlier in the session after, of course, Federal Reserve Chair Janet Yellen held the line on Tuesday of gradual increase in U.S. rates. In her testimony, of course, we've noticed before the Congress, Yellen expressed general optimism about the U.S. economy and, of course, said that gradual hikes in the federal funds rate were likely to be needed. However, she stressed also that the economic outlook was uncertain and that monetary policy was by no means on a preset course. Also, tracking down the euro exchange rate versus the dollar, which was 0.2% down to 1.1206, moving back to take aim at the 2-week peak of 1.1383. That helped push down the dollar index, which tracked the US unit against a basket of 6 rivals. It inched 0.1% lower to 93.916, but of course remained above a 2-week through of 93.425 set overnight. Yellen also highlighted that the risk of Brexit is nothing that it could be a more significant to economic resumption of its upside. Gradual tone, of course, of the European Central Bank, Mario Draghi, also testified that it stood ready to act with all instruments if necessary. Draghi's comments, of course, came as Swiss investment bank UBS warned its clients it may fall to execute some orders on its electronic trading platform. However, should have also be refunded after liquidity or cause extreme volatility. Sterling, of course, has seesawed in recent weeks with the June 23 vote looming large. A short covering rally brought it near a 6-month high of 1.4788 on Tuesday, and it last stood at 1.4683, up 0.2%. Gold in the commodity sector hovered its lowest in almost a week as Asian stocks rose on indication that Britain would vote to remain in the European Union. Bullion fell nearly 2% on Tuesday, in its biggest one-day loss in the month, touching its weakest since June 10 at 1264.10 an ounce. That came after 2 opinion polls on Monday suggested it was increasingly likely that the Britons would choose to stay in the EU. Gold was nearly flat at 1268.49 an ounce in late Asian trade. Oil prices in the energy sector rose in early Asian trading on Wednesday, with US crude was above the $50 mark a barrel after data from the American Petroleum Institute showed a larger than expected drawdown on stocks. US crude futures climbed 9 cents to 49.94 a barrel in early Asian session, and of course it earlier rose to as high as $50.54, making the first time it had risen above the $50 mark since June 10. US crude futures inventories fell by 5.2 million barrels for the week ended June 17, as the API said. The trading group figures were tripled the drawdown of 1.7 million barrels forecasted. In the calendar today, the most important is the Fed Chair Yellen that will testify before the Congress at 14 GMT. That's all for today. Stay tuned in the calendar. See you next time.